So I wanted to talk about tariffs because I have a lot of friends and family that have been worried about what's going on with the state of the economy with tariffs. And I just wanted to caveat this video by saying I am a filmmaker in the movie industry. I am not an economist, but I do study the economy and I have studied economic history just as a pure hobby since 2012 because it's something that one interests me, and two, I just want to make sure that I understand what's going on for myself so that I can make sure that I'm protected. um, so one of the interesting things about tariffs that I wanted to get into was that they're essentially a tax on goods imported to another country. So let's say Europe has a tariff on the United States on cars for 80%. More than likely you probably won't see Ford or any other American car in Europe because Americans and the American government don't want to pay that high tariff. So what does that do? That incentivizes car companies in Europe to manufacture cars for their own citizens. Does that make sense? So I just wanted to caveat that idea quickly and just kind of go through my notes because it's a little bit of a rabbit hole to try to like wrap our heads around and understand. But here's some stuff I wanted to convey. The United States relied primarily on tariffs for revenue from its founding in 1789 until 1913. And then in 1913, the Federal Reserve Act was passed, and that gave a non-government agency the ability to print money. And also, we didn't have an income tax. Think about that. It sounds crazy today, I'm sure, but there was no income tax at that time. And of course, until 1913, the income taxes were ratified the same year as well. So let's continue. 2 decades after the income tax and the Federal Reserve Act was passed, we slowly started to lower tariffs for other countries, especially post World War II. Slowly but surely, we started to increase taxes on our own citizens while lowering tariffs for the rest of the world. And the idea behind this was to promote free trade, which was framed as aiding European recovery. And think about this, it all wasn't altruistic. We needed the world to use dollars, which means that US corporations could penetrate European economies, and the dollar's role as the world reserve currency cemented itself in Bretton Woods in 1944. So let's zoom back a bit. So for over 100 years, the United States was manufacturing everything themselves. But then our biggest export became the dollar, and by lowering tariffs, the US shifted from being a manufacturing powerhouse to a consumer driven economy. And what did this do? This enriched corporations and banks who profited from cheap overseas labor, essentially, while eroding domestic industries like steel, cities like Detroit, which were known as motor cities for all the manufacturing that they did with cars. They all began to see a decline as more factories started closing and industries moved overseas, taking jobs away from American workers. So our printed dollars brought foreign goods, but rising prices and job losses hit the middle class extremely hard. Meanwhile, the financial and services industry grew. And think about this, the financial industry, they're not building anything tangible for the average worker. The middle class, the middle class essentially had an incredible amount of manufacturing jobs. They got squeezed and replaced by low wage worker service jobs, or the jobs were offshored overseas. So post World War II, the United States slashed tariffs to cement the dollar as the world reserve currency. But this came at a steep price. We traded our manufacturing strength for financial dominance, hollowing out the middle class while banks and corporations reaped the rewards. So, what are we trying to do now to reverse course? By doing reciprocal tariffs on other countries who also have tariffs against us, the idea is that would essentially bring back manufacturing to the United States. And how, you ask? So, if countries want to avoid the tariff, say, for example, on imported cars. Then the idea would be that instead of manufacturing the car overseas, they would build the car in the United States, creating jobs for American workers. So this is causing a lot of volatility in the stock market. And I know there's quite a few people that are worried. And of course, I get it. But why is this causing volatility in the stock market? With just with the US doing tariffs, like why is that causing drama, right? So because foreign companies have a surplus of US dollars thanks to them benefiting from lowering tariffs, they have been able to put that money into the stock market as well as US treasuries, real estate, etc. Because anyone that holds their savings in a currency that someone else can print, it loses value. So basically, these countries, they've decided because of the low tariffs to take their surplus and invest that in the US, quote unquote. But they're buying real estate, they're buying stocks, they're buying all these assets so that they could hold their money in an asset that would grow, essentially, right? One of the reasons these tariffs are bringing extra volatility back to the stock market is because if we raise tariffs on other countries, then they have less of a surplus. So they need to sell their assets and not only because of this, but because we have $36 trillion in debt. And the only way for the government to finance itself is to print more currency, causing the prices of everything you want to buy to rise. So these countries are seeing not only the effects of tariffs on their revenue, so they decide to take money out of the US, but they're seeing the $36 trillion of debt, and they're seeing that the US doesn't have an ability to finance itself unless they print more currency. And what happens when a government prints more currency? It devalues what your currency can buy, essentially. So countries are seeing this. They're afraid of the tariffs. They're seeing the $36 trillion in debt, and they're wanting to take their money out of the US because they want to store their money in something that the government can't control. So tariffs aren't a bad thing. Arguably, what's being done now should have been done 40 years ago. We're trying to strengthen the middle class by having America build its own products, which was the backbone of the economy for over 100 years. The problem isn't necessarily tariffs. The problem is the fiat system that we've strengthened over the last 100 years, exporting our dollars to the world and no longer building anything. And again, this started with the Federal Reserve. The Federal Reserve Act was passed in 1913, and then income taxes was also passed in 1913. So think about it. If we relied on tariffs, the US was running completely fine. Think of all the innovations that happened between 1789 and 1913. And then, slowly but surely, we started lowering the tariffs and increasing the taxes on our own citizens so that we could get other countries to use our dollar and making us the global reserve currency. But by us becoming the global reserve currency, we're no longer manufacturing anything. We're just exporting our dollars to the world, which hollows out the middle class and creates a wealth divide completely. So again, tariffs aren't a bad thing necessarily, but arguably you could say this should have had been done many decades ago. So with all that said, how can one protect yourself? I would say, look at what these countries are doing. They see the $36 trillion in debt, and they're wondering, how is the US going to be able to pay that back? The answer is we probably won't be able to. We have to find a way to outgrow the debt. So these countries, as well as companies and individuals that understand what's coming, they don't want to hold dollars for the long term. Now, if you need money day to day or within the next 3 to 6 months, obviously holding dollars is probably one of the better options. But if you want to be able to store your money for the next 10 years, for the next 20 years, saving it in dollars, I would say, and again, this is not financial advice. I am not a an advisor or anything like that. I'm just a filmmaker. But saving your money in something that can't be controlled by someone else, like Bitcoin, long term is the way out of this fiasco, essentially. So I don't want to just blame one administration for what's going on. It's been over 100 years of, of decisions that have hollowed out the middle class because we wanted to become the world currency and export all these jobs overseas, and people in the United States aren't able to manufacture or build anything because we no longer know how. So we're trying to reverse course and bring that back. But it might be too little or too late. We'll see. But again, to protect yourself, save in hard assets. I would say Bitcoin, number one option, especially Bitcoin in self custody. Why Bitcoin? Because there's only 21 million Bitcoins. It's a fixed and finite asset. Second option, number two, physical gold. I'm not really sure about this as a real option because obviously, if you have physical gold, how will you leave the country if you need to? How will you take your wealth with you if you need to? But if you feel like the United States is going to be a safe place for the long term, then obviously physical gold is also an option. Gold ETFs. You can open a Schwab account or a Vanguard account and save in gold ETFs. Now, that's a derivative of actual gold. It's paper gold, but you do get the upside in fiat denominated dollars, right? And another option would be to save in the S&P 500. Again, if you're thinking about savings for the long term, I don't mean 3 months from now or 6 months from now. Definitely have 6 months of expenses covered just in case anything happens. But again, long term, save in Bitcoin. Now, I'm going to link some videos below this video so that you can get educated on Bitcoin if you don't know what it is. But I believe it's a very important asset that's changing humanity as we speak. And to avoid the long term drama with tariffs and everything that's going on in the world, just be able to provide value to others, spend less than you earn. That's key. If you're able to be profitable as a person, as an individual working and providing value, that additional surplus savings should go to Bitcoin, number one. So, with that said, keep asking questions, keep stacking sats, and I'll catch you on the next one.